Good afternoon. In this video, we're going to go over this week's options watch list. Before I get into the watch list, if you're not in the room, you can find a link in the description of the video and in my bio section of social media accounts. Also, please subscribe to the channel and like the video. Now, looking at the economic calendar for the week, don't have much going on. We get the Fed speaker speaking throughout the days. I mean, that's normal. We expect that. As far as economic data, let's see. I have Tuesday with PPI. Wednesday we have retail sales. And Thursday we have unemployment claims and Fed manufacturing. So not too much there. Now the put to call ratio is very, very, very low. Everybody's on the call side. And when you have too many people on one side, the market makers like to rip it on the other direction on them and make them lose, because that's the whole name of the game. Only the market makers win and retail loses, and you need to understand that. Trading is more psychological than it is anything else. So everyone is on the call side, so I'm expecting a rug pull. When I say rug pull, I'm not talking a 50 point, 100 point dump or anything like that, or even on SPY. I'm only expecting like maybe 390, 380, possibly even 370 max. I'm not thinking a huge dump. So that's what I'm thinking this week. We're going to get a rug pull at some point. What it'll be, what day it will be, I have no idea. But most likely be Monday or Tuesday. So now looking at SPY, since I have it up already, we have the channel I have drawn out. Now I did pop over it. This is even plays out perfectly because everyone sees it's outside the channel. Everyone's going to think, okay, we're going to get a massive run up. Yeah, we could get a run up to 410 or 420, but I'm thinking is too many are on the call side. They popped it over the channel to get people excited, and we're going to end up probably getting under the channel, end up going to 390, possibly even filling this gap down to 380. So that's what I'm thinking right now. Plus we have a bearish divergence going on the hourly. You can see RSI is making lower right here as it's making higher highs. So we definitely get a bearish divergence going on the hourly. The weekly looks strong. The daily, it's outside the Keltner channel. Whenever it's outside the Keltner channel, it likes to pull back. It pops out right here and pulls back. This is when the market was strong, and right now the market's really not that strong yet. It does pull out right here, and it takes a little time before it comes back in. You rarely see price outside the Keltner channel on the daily, and whenever it does, it usually ends up correcting back in eventually. So the middle of the Keltner channel is right at 380 right now. That's where the RCT trend line is, and that's where the gap fill is, and that's what I'm kind of looking at right now, that 380 level for a pullback too. But we'll have to see if that actually happens or not. So watching under 395 for push down to the 390 area. Then we have gap resistance here at 385, then gap fill down to 380. So that's what we'll be watching, but you got to play it day by day because things can happen overnight. News can drop, anything can happen, and the market could just have a huge gap up and gaps down. That's why you need to be in the room in the morning, and we just make our decision then what we're going to play and stuff like that. I try not to forecast the future too much, but VIX down here is right at gap support. You get a gap right down here. Yeah, it could end up dropping more and filling the gap, but VIX gets down to 20. To me, that's going to be a huge area for a reversal for VIX. But you can see right here the RCT trend line right here on the weekly. It's right there, and it could bounce right here. So I'll be watching the VIX. Obviously, I watch SPY, but you got to keep an eye on VIX too. So when you start seeing VIX do some crazy things, like when SPY goes green and it's going green, something's up. So you just got to pay attention to the correlation between VIX and SPY, because they do matter. They usually give you heads up indication before something happens. Now, look at the RSI and the VIX on the hourly. It's rising as it's making lower lows. So SPY is making an hourly bearish divergence, and VIX is making an hourly bullish divergence. So they're both diverging at the same time. To me, that even plus with the put the call ratio very, very low, everyone on the call side, this definitely makes the more sensible that we're going to have a nice little push down on SPY, drop on SPY. So, but other things I'm looking at is Meta. A lot of the charts look bullish, but to me this could be just a massive bull trap. But if for some reason, if it's not, you can watch Meta over 115 and go finish the gap fill up to 120, so 125. So you can watch for that if the market for some reason doesn't care, but eventually it will. So you can watch that. Microsoft is another thing I'd be watching. Now the thing I'm watching for Microsoft is the 250 level. I think obviously the RSI is pretty up there on the hourly, so we could see a 250 harsh rejection like we saw right here down here, because that was obviously earnings, but this was the CPI news, so we could get to 250, and if it gets to 250, we look for a 250 rejection for probably down here for a push down to 235. So I know that the hourly looks, the weekly looks good, and the daily gets over 250. I mean, it definitely have a strong push, but I don't think we're out of it. We'd put the call ratios too high. It's definitely going to put a damper on a lot of things. I think it's going to reject right here. I don't think we're out of the bear market yet. CPI has indicated that it's starting to cool off a little bit, and that the Fed rates are working and stuff like that. So I think a lot of people are projecting that the Fed's going to start cooling rates, which they probably will, but I don't think it's going to happen anytime soon. I think we're not going to see the bull market until spring or late winter of 2023. But they're looking for a 250 rejection on Microsoft. Now on Netflix, same kind of thing. I'll be watching the 300 level. I get two huge green candles, and it's got resistance right here, the 295, and 300 has been a huge area for Netflix. But Netflix is one of those stocks where the market can dump and it can do what it wants. It's done it before and it can do it again. So I'd be watching the 300 for rejection, but you can also watch over 291 for a push to 300. If you want to play that route, and just be very leery of the 300 to 305 area that it could reject. But if it does manage to get over this area, over 300, like if it gaps up quite a bit and it's over 300 or at 300 when we gap up, assuming it gaps up, that we could see a strong push out of Netflix to break that 300 and get to a push to 350 on Netflix. So keep an eye on Netflix. Definitely could watch either or on that. But Tesla, kind of inverted the head and shoulders. You get the left, you get the head, and you get the right shoulder right here. So I'd watch it over 196 for a push to 200. Gets over 200, we can get to 210, 220, 230. So Tesla could definitely make a run for it. We'll have to see if that's what it will do. Amazon went crazy this past week. And the one thing I'm looking at, Amazon, it's at the 20 EMA on the daily. So we could reject that and pull back a little bit before actually taking off. But if it does manage to get to the 103 area, 104 area, I would watch it for calls for a push to 109, 110 for a gap close on Amazon. So got two things working for us there: the 20 EMA rejection and push over 104 for a gap fill on Amazon. Apple, another one. Apple, I'm looking at the 150 area rejection. It's a huge area, and plus it's had such a huge run up. I think we get a little bit of a pullback. Worst case, it gets pushed to 155, but we'll have to see what happens on that. So I'm thinking 150 rejection and a small pullback, but it could keep going to, like I said, 155, even 160. Now the weekly area is that 150 150, we'll say 155 area, and it could pop to 160. So trend line is also at that 170 area. I don't think it will get to that, but who knows? I mean, the market is very, very unpredictable. We'll have to see what happens. BA is the last one. BA had such a strong run, and you look at it on the weekly, it's at the weekly trend line. I did get over it, but it looks like it closed under it. But it doesn't matter. No matter how you draw it, if I draw it at the wick, the top of the wick of that candle, I mean, it's going to change the outlook of the play. I mean, I could put it from right there to, I can't really see the wick, top of the wick, which is right there. It still has right around the 180 level, so it's still within the weekly channel. And plus the RSI is well over what, 75 on the daily. And the RSI on the hourly is dropping, so you get a bearish divergence on that. So I would watch BA for underneath 175 for a gap fill down to 170, 165, 160, 155. It's been staying in this channel for almost a year. Then it dropped out, came back into it. So I think it's going to stay within this channel. I don't know if it'll get down to the 125 area, but I'm definitely thinking that we could get a push down to the 150 area. Be a good area for pullback on BA. So that's what I'm looking at for the week. And so hope this is giving you an idea of some trades this week, and hope to see you in the room. So thanks for watching.